Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of technical analysis. Today we will survey the entire market from the Dow Jones to the Nasdaq to the S&P 500 as well as the 10-year Treasury yield to see whether or not the Fed would likely reduce interest rate over the course of the next few weeks. This is more or less a technical analysis, but we are able to deduce a lot from volume and the price action. We will, of course, then go into Tesla technical analysis, which is my favorite stock to trade as well as to own. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So before we want to go into detail, I want to share with you a trading book, and a lot of the concepts that I will be using throughout this video is coming from that book. And that book is Mastering the Trade by John Carter, third or fourth edition. You can probably find third edition free online if you'd like the fourth edition, link down below. So I'm looking at trend, and according to John Carter, anytime that trend closes above 2.0, the market has an 80% chance of rallying the next day. If trend closed below 0.6, the market has an 80% chance to sell off the next day. So with that in mind, the very first thing that I see is that trend closed today at 2.97. And as someone who observed this number daily, I want to tell you that this is extremely rare that trend gets to this high. Usually 1.6, 1.8 is probably as close as it can get to 2.0. Today in particular, January the 18th, the market closed and trend closed at 2.97. This tells me that the chance of rallying the next day is fairly high. Similarly, trend Q is for the technology sector. It is 1.6, which is fairly close to 2.0, but again, it is not 2.0. I'm still just looking at trend at the moment, and the vast majority of the S&P 500 and the Dow Jones should theoretically rise the next day. And we'll see we'll see if that is true tomorrow. Remember, it's an 80% chance and not a 100% chance. So far, watching it like a hawk for the last few years, I would say that it's fairly accurate in my opinion. Next, I would like to look at the S&P 500. So I'm looking at the E-mini series right now for S&P 500. So one thing I note today is that the volume is fairly high. It is over 100% for the E-mini series for the S&P 500. Although we did have a retracement from the high in the morning all the way back down. So right now, the S&P 500 is struggling between 50 days SMA and 200 days SMA. And today, it proved that it tried very hard, but it fell below 200 days SMA and still sitting above 50 days SMA. It probably take tomorrow, if the market rally, for it to be pushed above 200 days SMA. And because these two price points are so close to each other, once the S&P 500 is above 200 days SMA, it will also necessarily be above 50 days SMA. And that will tell me that the market could potentially rise further. Let's take a look at the NASDAQ. The NASDAQ is hovering around 50 days SMA as well. And the bottom or the strong support seems to be around 10,800, and it is right now sitting at 11,400. The Dow Jones is also hovering around 50 days SMA. It seems to lose 50 days SMA today. It has not reached 200 days SMA yet. The 50 days SMA, which is the white line here, cross above 200 days SMA, which create a golden cross. The golden cross is essentially the opposite of the death cross, which means to signal a bullish era to come. So despite the fact that the Dow retraced almost 650 points today, which was quite disappointing, I do think that the market is set up for a rally. My next market internal, especially in an era where interest rate is hypersensitive and hyper focused right now, is TNX. TNX is the 10-year Treasury index. It predicts the 10-year Treasury yield, which also has direct correlation with the interest rate by the Fed as well as the mortgage rate for the real estate investors out there. It usually has an inverse effect on the rest of the stock market, meaning if TNX rises, the stock market usually tanks and vice versa. So what I'm noticing right now is TNX2 is hovering between 50 days SMA and 200 days SMA. We know that if TNX falls below 200 days SMA and stay below there, it is very bearish. We also see a head and shoulder pattern, this being the left shoulder, this is the head, and this is the right shoulder. When we have a head and shoulder pattern, TNX is set up to fall. And the Fed would be meeting at the end of this month. So in about 12 to 13 days, they will be meeting. And if this serves as a prediction, it tells us that the Fed will probably ease up on interest rate increases. That doesn't mean that the Fed will automatically pivot to lowering rate, but as long as Fed has a dovish tone instead of hawkish, the market could still be optimistic. Today, TNX reduces by 1.6, which is 4.5%, which is one of the biggest single day drop in recent history. And so you can see that the high point of TNX was around mid to late October. Then it had a single biggest day drop on November 10th. And if you remember, November 10th was the day that the October inflation report was released. And it was very optimistic. That was the first time inflation shows signs of slowing down. And then it continued to lower, rise recently, and then continue to tank a little bit. Right now, it is sitting just above 200 days SMA, but below 50 days SMA. It doesn't mean it's necessarily super bearish. It just means that it has signs of bearishness, and we need to top that off with the Fed meeting at the end of January. But so far, if it falls below 32.91, it could be very promising for the stock market. So this is how I read the TNX. I note that there is a bull flag that I drew way back in November, October timeframe, and it predicts that the TNX would rise further. However, recently, with the reduction in rate and in bond yield here, we see that the TNX fall outside of the lower end of my bull flag, which means the bull flag is canceled. I still leave these lines here, which are the bull flags, for your reference, but for all intents and purposes, the bull flag is canceled. If you want to deep dive a little further on the weekly chart, you sort of see the head and shoulder pattern, or if you just look from this point out, this is also multi-top. Of course, there's a possibility that it will bounce back up, but with a multi-top like this, it's likely to fall. When it does fall, the real estate market could stabilize and the stock market could rally. Let's look at the outlook for some of the tech stock. This is Apple, quintessential to the Dow Jones, and it is a very a decent stock to understand the climate overall optimism in the market. Apple so far has been hovering around a healthy range. It has not been extremely bearish, although it is not quite breaking out just yet. This is a weekly chart for Apple, and you can see that I have a weekly bull flag for Apple drew all the way back in 2021. Apple is still not breaking that bull flag, and if my bull flag materialized, the first price target for Apple is 195 and the second price target for Apple is 280. That is probably a much longer term outlook because this is a weekly chart after all, and Apple is still maintaining its price range around the 135 140 area pretty well. On the daily chart, Apple is at around 50 days SMA. It lost 50 days SMA today, but time will tell whether or not it can make it back up. 50 days SMA right now is at $138.89. So Apple is not too far behind. Today's volume is only 88% for Apple. Let's take a quick look at Amazon. So Amazon is just like the rest of the market. Amazon has been beaten up pretty badly, and the floor seems to be around the low 80s. Amazon has since got back up to $95. This is post split. However, the last couple of days, Amazon seems to show signs of overbought, so it needs to correct a little bit before deciding where to go. Of course, if the overall market is optimistic heading into earnings season for Amazon, as well as Fed meeting, then Amazon could potentially rise further. But Amazon also recently announced layoff of over 10,000 employees. So this could be a sign that it also understands the economy is slowing down. The e-commerce sector is slowing down, potentially affecting even AWS, which means that the earnings outlook could be a little bit less optimistic, and that could affect the stock price next week or so. Back to my favorite stock, Tesla. Tesla volume was really good the last couple of days. Today's volume was 123%, so it is definitely heading in the right direction going into earnings. The low point for Tesla recently was $101, and it is still trying to maintain the baseline or the support line at around $110. However, Tesla is now below both 50 days SMA at $158 and below 200 days SMA at $236. So it is, for all intents and purposes, very bearish. It is also very weak with all of these bullish price action here. This upcoming earnings, as well as the outlook for 2023 and beyond, is very important, and I hope to hear Elon Musk speaking from his own view about where the EV market is going for the next few years, assuming this year we might have a mild to medium recession. I also think that a lot of folks attribute negativity to the recent price decrease. I do think that stirred up demand, and given the fact that Tesla is very, very healthy in margin, that price reduction would not matter as much from a margin standpoint. Whatever it gives up in margin, it makes up for it with quantity. It will make up for it with sales and quantity of sales. So I think overall Tesla's still in very, very good shape. The company is obviously a lot cheaper to buy today than a few months ago or a few years ago. I do still think that this company will go places in the near future. I strongly believe in it. I still have a very strong portion of my portfolio in Tesla, despite the recent price action that was not so optimistic. Overall, I think we're set up for a short-term rally. Whether the rally is sustainable and will be bullish throughout 2023, we do not know. All we know is that in the short term, the stock market seems to be pretty optimistic, all contingent upon Jerome Powell's tone toward interest rate and inflation data. I believe that average down on stock prices and purchases are the best way to go. Stock has been moving down between 40 to 70%, especially tech stocks this year. And so it is good opportunity for us to purchase and hold long term. I will continue to purchase when stocks are this low. And I hope that eventually it will spike up for the long term, which will happen. It's just a matter of time. So it is currently a gift, especially with Tesla, to be purchasing at this price. So this is it for this video. Thank you very much for paying attention thus far. If you have any questions, comment down below, and I'll be sure to get back to you. Thank you for all of your support, despite the fact that I don't make super regular videos anymore. Coming back to the office does cause a lot of time constraint for me to make more video for you, but I will definitely try as often as I can. Once again, thank you very much, and until the next video, bye.